Hello, welcome to Earnings Call Preview, the show where we dissect or rather tell you what the earnings season could look like, the key trends, the key stocks to watch out for, and what you as a trader and an investor should be doing with regards to specific names and sectors. Joining me on the show today, yet again, is Vikas Khemani of Edelweiss. Needs no introduction. Vikas, good having you. Thanks for joining in.
Pleasure.
Let's just briefly bifurcate this earnings season into two. One, the domestic oriented sectors, two, the export oriented sectors. And let's start off with the domestic ones. The monthly dispatch numbers, let's start off with autos. Alphabetically also, I think that suits. The monthly dispatch numbers looked fairly promising. What do you think the earnings could show up?
I think, amongst the domestically oriented sectors, auto would be the one which would kind of show decent numbers, and I think it has been reflected in the dispatch numbers also. So I think you will see sequentially and YOY basis reasonably decent growth coming into this sector. And also I think they are directly linked to the economic recovery. So as we are sort of seeing the improvement in the sentiment, as we are seeing sort of more demand environment improving, you will see this sector continue to do well. And I think also more importantly, some of the companies like Maruti have had some new product launches and all those things. So I think that also is driving sales. You have festival season ahead of you. So all those things are also factors which are driving sort of sales. So we do feel that domestically oriented sector will continue to improve quarter on quarter in terms of their earning trajectory over next couple of years. I think whatever change we have seen in the recent past will slowly but steadily, I think, trickle into the domestic oriented sectors such as auto, cement, or capital goods for that matter, or banking for that matter. So I think you will start seeing quarter after quarter improvement in these sectors.
Okay, so positive note there. Let's nail it down to a few things as well. So the general consensus seems to be that Tata Motors and Maruti amongst the large caps will probably show in fairly decent numbers. Are you playing ball with that? Do you believe these two companies could show?
Absolutely. I think both companies would do better, and I think most of the things are out in terms of numbers. Dispatch numbers are out, and it is no secret. So I think it has to reflect into the. So auto is one sector you don't have to wait for the quarterly earnings to get sense in it. You get numbers much ahead. Obviously, financial number comes in the quarterly earnings, but so you get fairly good sense. So I think it looks that these companies are set to report good numbers.
Two stocks, slightly contrasting fortunes over the last 1 year, but both of them are right now doing very well. Eicher Motors as well as Ashok Leyland. Now, Eicher is probably an RE story. Do you think the numbers can justify the valuations that it is trading right now? And two, Ashok Leyland. I mean, everybody's talking about the CV cycle turning. Even if the numbers don't show in this quarter, would the market be buoyant on Ashok Leyland? So, two stocks.
So I think Eicher Motor, I think clearly is the way it's in shorter term, the valuations looked overstressed, but I think it's a story which is seen as a structural story. It is seen with sort of no competition. It's a niche segment, and it's a very good management, very good business model, and very good product. There's no competition to the product of especially in the bike segment. I think that will continue to do well, and there's a huge demand. I think probably Eicher is the only company where there's a waiting in the product delivery, and I think that sort of gets reflected, and I think it's a very structurally different company. So if you're looking to invest into from 4 or 5 years perspective, you can still invest, but I know shorter term one cannot. It is definitely an expensive story. Ashok Leyland, again, I think it's a pure play domestic CV cycle play, and I think numbers have not yet come in, but I think recently they did QIP, balance sheet looks decent, and I think they have a reasonably good market share after Tata Motors. So I think if the economic recovery happens, and I think they have a good capacity, it's a decent company, so I think the benefit of that will be seen. Though I think we do not cover that actively under research, so I don't have a handle on the numbers, but I would tend to think that if the CV recovery happens, Ashok Leyland will also benefit, because that's one of the domestically oriented sector.
Okay, let's stick to the other domestics and cement. What do you expect this time around? Could it be a margin expansion story? Because again, the consensus view is that in certain cases, PAT could actually grow almost 50-60% even for large caps, forget the mid caps. What is your expectation?
So we are also, I think, very positive on the sector for some time, and I think we continue to believe, because I think it is again linked to the domestic recovery. Construction activity has picked up, housing activity has picked up, demand environment has picked up, dispatches have picked up, and I think very directly linked to that is the realization. While I think some amount of capacity is still there, but I think there is some sort of discipline in terms of pricing which is being played in the market. So I do think that cement will continue to do well, and I think as you look forward, cement is one sector where capacities come in sort of steps. So as the demand and supply or capacity gap narrows down, you will see probably further improvement in the pricing, and capacity can only come after a couple of years. So I think whatever capacity gets absorbed, then you will see further good pricing environment. So I think cement structurally looks also decent from a domestic economic recovery perspective.
Okay, watch out for some of these names. The consensus views seem to be that stocks like JK Lakshmi Cement, for example, could throw in a big surprise, but even Ambuja, Ultratech, etc. could do very well this time around. The third most important leg, I believe, of this domestic oriented story would be banks. And I read 2 or 3 notes, spoke to 2 or 3 people. Somehow people seem to be believing that this time around the PSU banks could actually deliver a positive surprise as well, maybe because of treasury gains or otherwise. But there could be a positive numbers coming out of those stocks. Would the market like that? And would the market take into account the delivery of the numbers, or the market will still be circumspect on these stocks?
So I think banking sector, probably I do feel that this quarter would be slightly disappointing, because I think some of the sort of actions or sort of some of the reforms that were to happen to take care of large asset quality issues on the large blocks of the industry, such as power and coal mines and all, I think are still pending. And I think you would not see any improvement on those sort of asset quality issues. So banking right now is an asset quality issue. I mean, I don't think credit growth has right now picked up in any meaningful manner. So I think that story can't be played out. The only thing which market would watch out is what is happening on the asset quality. Earnings growth, I think, would be, in my opinion, sort of reasonable. It won't have major surprises. And the key thing to watch out is the asset quality issue, because I think markets were expecting some amount of development to take place, some amount of improvement to take place on those fronts. So if for any reason some amount of slippage happens further, which is quite likely, because I think so if that happens, what kind of impact, how market reacts in shorter term, market could react either side. But positive side is that you have some of the treasury gains to kind of take care of extra provisions. So I would say probably from banking is the one sector this earnings would be quite muted. I don't think much can be expected, and that's probably some of the stocks have corrected sharply in the recent in the past. So I think I would say that probably banking sector will take a bit of time to perform in terms of quarterly earnings. I would say Q4 would be the one quarter which you should watch out in terms of major improvement in the earning. Rather than, I think this and next quarter probably would be somewhat muted.
Would that be the case for some of the smaller private banks as well? Because I hear a lot of people talk about how Yes Bank, IndusInd Bank, etc. could actually deliver very good numbers.
Yes, so I think there's a case for specific banks whose business models are kind of more aligned towards non-wholesale sort of lending. So if you see, IndusInd is more aligned towards retail, it's non-wholesale kind of lending. So large portion is so I think those kind of banks may not have further asset quality issues, and I think that would definitely be taken. But I think partly that is sort of factored in, that is expected. So bank specific, there will be definitely like you might not see any in HDFC Bank you might not see any deterioration.
Of course,
so I think those kind of issues would be there. I was just addressing to the broader macro banking sector environment. I think we may not see any significant deterioration in, let's say, in case of ICICI Bank also. So I think those kind of things one have to see. NBFC specifically focused on the rural sector might have to be watched out. That is one segment probably you will watch out if there is any sort of further slippage. If improvement does not happen in that, I think market will get jittery.
One of the larger players has disappointed the last couple of times.
Yes, a couple of times. So if any either further deterioration happens or improvement does not happen, then I think market will get worried on that specific segment. So I think one has to look at really with that kind of approach.
Let's talk about the larger export theme. There is IT, there is pharma, a couple of other spaces. What do you think happens to them this quarter?
So I think if you look at last 4-6 quarters, I think export oriented sectors have led the quarterly earnings growth because of the weak rupee and I think improving demand scenario. And I think the weak rupees, I think probably will start, the effect of weak rupees now will start tapering off. So this quarter you will not see impact of that sort of coming into this quarter. So to that extent you will see slowdown in the revenue growth and maybe possibly in the profit growth. But having said that, I think especially if I were to come to IT and pharma, these are the sectors both have very robust demand environment in the developed markets, and I see that that's not going to change if we were to look at from a trend perspective. I think IT in my opinion, for next couple of years can continue to grow, at 12 to 15% top line growth easily. And I think that's a decent growth, for the sector. So I think, demand environment is likely to remain robust. I think, rupee is according to us, rupee is unlikely to appreciate in a significant manner. So if rupee is around here and demand environment is good, I think these sectors will continue to hold promise, for next couple of years. Okay. So I would not get too worried about the sector from this quarterly earnings perspective. It is just a temporary base effect. Business model continues to remain, robust, and I think, export as a theme also is very important to the government, to the country right now.
Sure.
So I think, I would say investors should look to, split their portfolio between, domestically and export oriented sectors probably equally, because both are, having equally good promise
right now. Okay, just one last thing on IT before I move on to something else. Is there a particular entity or a particular management or a particular theme within 3 or 4 companies that you would definitely watch out for? It could be software services, it could be SMAC, it could be something else. What would you watch out for the most from delivery perspective this quarter?
No, I think there's nothing specific, because I think SMAC we've been very, very bullish on SMAC as a segment, but I think it's an emerging area. I don't think in this quarter it's going to be significant to any company, but I think we like few companies like Tech Mahindra has been very, very well positioned. I think it's a smaller company, so I do feel that smaller companies, given their base, will be able to grow better and faster. So hence the probability of you making returns on smaller IT companies is going to be better. So I think that is what you have to watch out, and also which segments they are positioned into it. So I think I would say probably Tech Mahindra, Persistent are amongst the small companies much better positioned to sort of give you better return. But I think I'm equally big fan of TCS, who's been doing phenomenally well over I don't know how many quarters now.
Yeah.
And I think management has been guiding reasonably well over next few years. So I see no reason why they will not also not deliver. But I think given their base, the re-rating possibility probably would be limited as compared to a Tech Mahindra or a Persistent kind of.
But the juggernaut rolls on for TCS. I must say it's very impressive. Lastly, you did a conference recently. We covered that as well, the Agri Input Conference, and some very interesting names that came out there. They have shown very good results the last 4, 6, 8 quarters, barring maybe a few exceptions here and there. What do you anticipate out here? Can the delivery continue? Because it's at the end of the monsoon quarter, which wasn't the best. How do you think this quarter could be for them?
So yeah, there are 2 ways to look at it. One is the long term, and second is this quarterly earnings.
Sure.
We do feel that this quarterly earnings probably you might see somewhat subdued or muted growth, given the fact that monsoon got delayed and there was a lot of uncertainty around monsoon. So I think you might see subdued growth, you might see somewhat slowdown in the growth from a purely this quarter perspective in all the agrochemicals companies. But I think that does not mean that the sector is sort of not great from investing perspective. Because I think if you look at 3-4 years perspective, I think India has a huge need of agrochemicals to improve our agro productivity, and government also has huge focus to improve our agri productivity. So I think from a potential perspective, I think we have a huge runway, I think long way to go, and these companies can grow according to me 20-25% annually for 5-7 years.
Wow,
so if you have that kind of horizon, and if you have that kind of promising growth profile, then I think in fact I would use this kind of quarters where you have somewhat disappointed because of one particular season, I think to use an opportunity to get in and build your position, because I think from a structurally and long term perspective they hold huge amount of promise.
Vikas, always good having you. Thank you so much for taking the time out, coming in our studios and giving us your views.
Thank you for having me here.
That's the view from Vikas Khemani of Edelweiss with regards to specific spaces that you should watch out for this earnings season. Thanks so much for watching Earnings Call Preview.